It's the Larry Kudlow Show. Free market prosperity starts here. Now, here's Larry Kudlow.
Welcome back, everybody. I'm Larry Kudlow. Reset. You can listen to this show on the internet. Live stream us on the internet. And you'll hear us all across the country, around the world, throughout the solar system, including the Milky Way. All you have to do is LarryKudlowShow.com, LarryKudlowShow.com. And during the week, please join us on Fabulous Fox Business. Name of the show is Kudlow, 4 to 5 p.m. every day, Monday through Friday. And if for some reason you can't get there at 4, well, just text your favorite 9-year-old, and she will show you how to DVR the show. All right, stocks. Stocks are on a roll. Stocks are just on a roll, breaking records left and right. We're going to talk about it with Stephanie Link, Chief Investment Strategist for Hightower Advisors and Head of Investment Solutions, and Pete Najarian, co-founder of Market Rebellion and optionMONSTER. So, kids, thanks. I'm calling it the Scott Bessent bond market rally and the Donald Trump stock market rally. That's the way I'm calling it. Bond rates coming down. They like Bessent. And they like the economic team, Kevin Hassett, Russell Vogt, and they like tax cuts and deregulation and King Dollar from Donald Trump, Stephanie Link. I don't know. This rally, this thing's got more legs than I would have ever dreamed possible.
I know. And you know, we're up 5.5%. Since the elections in the S&P 500, 6.7% in the NASDAQ. I think a lot of it is what you talked about, Larry, that everyone is they've got this euphoria over the new administration coming in, given the deregulations, lower taxes, pro-growth initiatives. But he's inheriting a 3.3% GDP number. So we already have some momentum in the economy when we have. Since January 2023, everyone said we were going to be in a recession. Well, that was hardly the case. Last year we grew 3.4%, and now again, as I mentioned, 3.3 is the Atlanta Fed tracker, the most recent number. Maybe we're running like, I don't know, 2.5, 3 or so, but it is strong. And it's really encouraging that not only are you seeing the consumer hang in, you had strong retail sales, you got winners and losers in retailers, but for the most part, online is strong. Walmart, Costco, Lululemon. Across the board, the consumer is spending where they want to spend. ISM services near 60. So you've got a really good, favorable backdrop on the consumer. And oh, by the way, last week, I think the most interesting thing was the ISM manufacturing number, while still in contraction, rose 200 basis points, and new orders rose 300 basis points month over month. And so maybe you can get a broadening out of the manufacturing economy as well. And I think all of this means that we continue to see better than expected earnings. And that's what you taught us all of this, that stocks follow profits. And right now they're going higher.
Yeah, but, you know, at Pete Najarian, it's interesting, too. Bond yields have come down. Mm-hmm. That's a good sign because there was a lot of talk about Trump policies, growth. Somehow growth is going to be inflationary. I don't buy that. I've never bought that. In fact, growth is counterinflationary. Tax cuts, marginal tax cuts, create incentives to work, save, and invest, produce more goods. That brings prices down. I mean, the bond rally is the 10 years down to 4.15. It got almost as high as 4.5.
It's amazing, right? And the speed, the velocity of that move is incredible. First of all, I had to say hello to Stephanie Link. I haven't had a chance to talk to her in a really long time. So hello, Stephanie. Good to be with you.
Hi, Petey. How are you?
I'm doing great. But you guys hit the nail on the head. There's no doubt. I mean, Bessent was the right person for the markets for sure. That's at least the interpretation, and it seems to be playing pretty well. And we're all talking about the tax cuts and deregulation and all of this, but the consumer, to Stephanie's point, is they have been much stronger than people ever want to give it credit for. And it's really interesting because you look over at the tool out there that says, when's the next cut? Is it going to be a quarter point on the next one? And basically, we've been anywhere between 66% for about a week and a month ago out. But most recently, now here we are at 86% for that quarter point. So I would say that that's almost a layup at this point and a slam dunk. But I think one of the strengths of this market has been the rotation, and I always feel better when it's not just technology leading or something like that. And I think that's what we are seeing. We've seen financials have a really nice run to the upside. Yes, they pulled back just a little bit, but that's been strong. And I think overall, when you look into energy and the different parts of energy and everything that goes along with that, including nuclear, there's a lot of different storylines that are going on right now, and we haven't even touched yet on crypto and Bitcoin and all the rest of it, where it's absolutely been on fire on the move to the upside.
That's the close on Friday. Is this right? 101,000?
Yes, sir. We got over 103,000, Larry. And think about this: the range was 92,000 to 103,000 on Friday. I mean, it's just outrageous. And yet, and I realize that the volatility index, the VIX, doesn't. That's not what we're looking at as far as Bitcoin, but we are looking at that on the S&P. The fact that we're at a solid 13 and we are just in an extremely tight range, I think it says volumes about where people are in the market now, the nervousness. I would say that at these levels, to me, I think buying puts would make a heck of a lot of sense. But there's a lot of reasons to be pretty excited about this market.
Steph, you buying Bitcoin?
I am not buying Bitcoin.
Oh, Steph.
No, I am not. No, but I will tell you what. You know what I have owned in the past, and if it were to pull back, Coinbase is interesting to me, only because I have no idea in terms of fundamentals about what Bitcoin is going to do. But I sure know that there's a buyer and a seller, and there's a market for it, and Coinbase is the exchange. So that's something that I have owned in the past because I can kind of get my head around it on a fundamental basis because it's, again, it's an exchange, but it's hard to own. It's hard to own. It's hard to own Bitcoin because it's not a fundamental call. You wake up one day and it's 110. Is it? You wake up one day, is it 70 grand? Like, you just don't know. It's tough.
Stephanie, how's the Coinbase done? How's that stock done?
Huge. It's absolutely huge. I mean, it's been one of the winners in the space. Doesn't get talked a lot about.
Pete Najarian, how do you for our listeners, how do you buy Bitcoin? If somebody wants to buy Bitcoin, what do you do?
I would say this: don't buy Bitcoin. Buy all of those that work off of Bitcoin. And then we're talking about the miners, but it's not just the miners. You guys just brought up Coinbase. Just take a look at that chart and hit again new 52-week highs just this past week. So I think when you look.
It's up 100% year to date.
It's crazy, right?
Sorry, Pete.
It's outrageous. No, but
Bitcoin's up 138%, so they're moving together.
Right. And think that's exactly what I like about it is that you can find others, and it's not just Coinbase. You could go to Hood, you could go to TerraWolf, you could go to Riot, you could go to SMCI, you could go to MSTR, which is the Michael Saylor. I mean, think about this. Michael Saylor at this point in time owns more than 2% of all the Bitcoin that's out there. So, you know, when you look at that company and you wonder, gosh, these guys really are moving at an incredible rate. It's what they're doing is selling stock and buying more Bitcoin.
Well, it's so interesting. So President Trump has been a supporter of cryptocurrencies. In fact, he did fundraising in terms of cryptos. He's appointed David Sachs, Silicon Valley entrepreneur, as the so-called crypto czar, and he's appointed Paul Atkins at the SEC, and Atkins is very pro-crypto. So, I mean, it's all – they're going to try to deregulate it. Gary Gensler, the SEC chair, has always been against it. The Fed is against it because they want to have their own currency, central bank digital currency, which I think is a lousy idea. I mean, I don't know. I mean, I know it's speculative, but I think it's kind of cool. Competes with the dollar.
I agree. I agree. And I would also say this, as I brought up some of those various names, Marathon would be another one, and CleanSpark, and there's a myriad of names that are out there that have made huge moves. But when you look at the dollar-wise, it's a lot more palatable. And, you know, in my world, as you guys know, I'm in the options world, there are ways that you can have the leverage of owning calls and have, you know, exactly what your risk is when you go in on something like that. And that's where I think that people can stretch out, because who can afford $100,000, you know, instrument? That makes it really, really difficult and almost impossible. But there are a lot of different ways where you can go there, and you'd be amazed at how how much you can look at that and just put one chart over another. They almost are identical.
All right. Got to take a break. Crypto break. Stephanie Link, Pete Najarian. I'm Kudlow. I'll be right back, folks.
This is the Larry Kudlow Show.
The sun's shining, birds are singing, and all feels right in the world.
Until the season changes, and suddenly you lose your motivation to get out of bed. In fact, 1 in 5 people experience some form of depression, no matter the season or time of year.
At the American Psychiatric Association Foundation, our vision is to build a mentally healthy nation for all, because we want you to live your best life and be your best you all year round.
Please visit mentallyhealthynation.org to learn more.
Now, back to the Larry Kudlow Show.
We're talking stocks with Stephanie Link, Chief Investment Strategist at Hightower Advisors and Head of Investment Solutions, and Pete Najarian, co-founder of Market Rebellion and optionMONSTER. You know, Steph, another big winner in this massive rally is banks. I'm just looking at the KBW Bank Index. These are the larger banks, up 41%. Year to date. I mean, the S&P is up 28%. So banks are up a lot and they're outperforming, which I think is, part of that I think is hopes for deregulation, which is very likely. But also it's a good sign for the future economy.
Oh, sure. Absolutely. And, they started to rally the first day that J.P. Morgan reported their third quarter. And because the quarter was outstanding and the Big Six also followed suit the following few days. And it was fees were better than expected. Get this, Larry. Investment banking fees were supposed to be up 15% at J.P. Morgan. They were up 30%. And you saw that was the same theme across. It's not only investment banking fees, it's wealth management, it's capital markets, it's M&A, but we haven't even seen that unleashed yet. But I do think you're going to start to see that now that its CEOs and the executive teams can know what to expect going forward. And, of course, deregulation. You're going to get capital rules that are much more favorable for the banks once we get this Basel III endgame announcement. And you've heard companies like Brian Moynihan, a CEO of Bank of America, say, hey, as soon as we know what the rules are, we're going to buy back $20 billion worth of stock. And that is a really great recipe. In addition, one last thing, a steeper yield curve will help the net interest income story. And we haven't had a net interest income story. Petey knows this just as well as I do, probably in about 10 years. So that's still to come. And these stocks are still cheap, so I still like them.
Will they ever make loans, C&I business loans again, Pete? That was one of the original ideas behind the bank. I just wondered if they'd make any more loans.
Yeah, I don't know if they will or not. I would totally agree with Stephanie on this, though. And this is something even at the beginning of the year. So this wasn't even, I know it's really accelerated, but all year long, all you've got to do is look at these financials. And I always like to tease that whole mantra that everybody had for so long about the Magnificent Seven. There's so many more than seven, Larry. I could give you hundreds, right? And so, but I look at these financials. I look at Goldman Sachs. I look at J.P. Morgan, absolutely skyrocketing. Morgan Stanley's done extremely well. It's investment banking. It's the buybacks that Stephanie was just referring to as well. And how about even just an acceleration to some degree, at least, of IPOs? There's a lot of different areas, I think, for these banks where they're making money in a big way. And I especially look at it from the investment banking side. That's where they've absolutely crushed it, and I think they'll continue to do so.
Stephanie, do we really need more Fed rate cuts? As you said, the tracking of GDP is about 3%, and actually the core PCE deflator and the core CPI is still above the Fed's 2% target. I can't quite understand why they're cutting rates.
I know. If they do cut, I don't think it's going to be nearly what we thought or what a lot of people expected. I'm not sure we do need them to cut. As long as you have above-trend growth in GDP. And that's why it's so important to watch the numbers and to watch the composition of GDP. And the consumer is showing no signs of slowing. And as I mentioned, you and I have talked about for 2 years the whole, in the manufacturing economy, the reshoring, onshoring, grid, and power. That has been on fire in terms of those stocks, that sector. But if you get manufacturing to broaden out, I think that's actually pretty positive. In my view, I don't think you get down to 2% inflation. I just don't. Not with above-trend growth. If we start to slow down in growth, which I don't see, then we can talk about a little bit lower inflation. But I am encouraged. One thing though, on with regards to inflation, productivity's been pretty okay. It's not as good as I would like to see it, but 2% is not bad, and that should help too.
Yeah, 2% is good. People go back to work. I want 4 or 5% growth.
Yeah,
always have.
Love to see that. Yeah.
I would argue 4 or 5% growth will bring inflation down. You produce more goods, more goods, right? If you have, more apples, get more apples out there. The price of apples will come down. Pete Najarian, what's your favorite investment right now?
Well, I know you guys are not going to be happy about this, but everybody's talking crypto, right? For all the right reasons. We're watching Bitcoin get up and over 100,000. It's almost like we've completely abandoned AI. It's like that doesn't even exist anymore, right? And when you look at some of the companies that are involved in there, and not everybody, follows them as close as Stephanie and I do probably, but these AI names are still just a freak show in terms of what they're able to do. I mean, we how often do we even talk about Meta? Probably not often enough, considering the absolute rocketing move that it's made. But I also, that SMCI is an interesting one because it comes with some flaws, but I really like what they're doing, the data centers, the servers, the storage, all the things that they're working on. I just think that that's an area now that anywhere in that AI world, and I know we've taken a pause in NVIDIA, I would not be surprised to see that make a pretty substantial move to the upside in the fairly near future. It's finally relatively cheap.
Jim Cramer's dog was named NVIDIA.
Yes, it was.
It was a long time ago, and nobody really knew much about NVIDIA. Steph, I just thought I'd throw that in. Steph, what's your favorite investment right now, recommendation?
Cybersecurity. I actually think cybersecurity is bigger than AI. Unfortunately, because we have cybersecurity companies that are having cyber attacks on themselves. Think about that. That's horrible to think about. And the reason is because we have too many vendors, and none of the vendors talk to each other. And so I think that you are going to see two areas of where chief technology officers are investing, because that's who I talk to, and I know Pete talks to them too. They'll say AI because they have to learn what AI is going to mean for their business, and cybersecurity because they can't afford to lose their business. So those are the two areas you're going to see double-digit growth from now until the eyes can see. And so you can buy best-in-breed CrowdStrike, or I bought last week Zscaler, which has actually been a laggard, because I know it's not as good as CrowdStrike, but I do know that the industry overall will benefit collectively. I think you're going to also see a lot of M&A in the industry. The bigger are going to get bigger.
You like the dollar, Pete Najarian?
Yeah.
20 seconds.
It's not my forte, but one last thing. I'll give you another area. How about airlines? They're absolutely crushing it. American Airlines, 52-week highs. They raised their forecast, all of that. That's something that I think
Jim Cramer
lost with people.
Jim Cramer taught me something when we were together years ago. He said, never, ever, ever buy an airline stock. Stephanie Link, Hightower Investors, Pete Najarian, optionMONSTER. Thanks, kids. Money in Politics coming up.